Good morning, good morning, good morning. My name is Dr. Boyce Watkins, and welcome to the Black Financial Channel. That's theblackfinancialchannel.com. I wanted to come in today because I assume some of you may have questions for me and want to know what's going on with the stock market right now. Let me turn this stupid phone off. I just got this new phone, and they're always so confusing when you first get them. Anyway, yeah, so the stock market has been collapsing today. You probably lost a ton of money. You're probably feeling felt a little crappy when you looked at your portfolio this morning. And I'm gonna tell you, it's interesting because I have a fiance who's deeply into metaphysics, and one of the hermetic principles has to do with ebbing and flowing, and that everything that goes up comes down, all things that go down eventually come up, and you got to be ready for all of that. But you already knew this anyway, right? You already knew this because you heard New Edition 20 years ago say, "Tell me, baby, can you stand the rain?" Right? And this is the question that is being asked right now of you as an investor: is can you stand the rain? Are you, everybody, sunny day, never experienced this, is that it's rained for years before. There have been times where it didn't stop raining, So I just want to kind of get you guys prepared for all the possibilities that may await you when it comes to a market decline. Sometimes it doesn't just sort of happen quickly and go away. Sometimes it sticks around for a little bit. Now, here's one of the other things that here's one of the things. I'm not going to talk about some other topics. I'm talking about the stock market today. So if you have questions and stuff, I'm going to hit on what's going on. I don't have a lot of time. So if you have questions, I'm not ignoring you. I have to make sure I stay focused on this. So anybody wants, I saw a question about contract with Black America, stuff like that. Yeah, you can go check out my interview with Ice Cube on drboycetv.com if you'd like to see that. We're not, that's his contract, but I wanted to support what they were doing. So anyway, here's the deal. So basically the market crashed pretty bad today. It went down by about 400 or 500 points. And that wasn't unexpected. That was not unexpected. If you recall, a couple of days ago, I mentioned to you guys that this Robin Hood risk, this Robin Hood phenomenon could cause a lot of market volatility. Market volatility means that you can have big movements up and down. That things that can go way down can also go way, way up. And that's what you're seeing. You're just seeing the roller coaster ride right now. And here's the other thing. There was a massive positive movement in the market that took place right before this occurred. You had about, really, you could say you had 30 days of amazing returns because you had the best August since 1986, since Dougie Fresh was a teenager. But going more deeply than that, you actually have had an amazing market since the COVID crisis occurred. I'm talking about the instant that the COVID crash occurred, the market started climbing and just so much money was made. But the thing about this economy is that you're dealing with a K-shaped recovery. A K-shaped recovery is jagged, like the letter K, just up and down all over the place, kind of skewed, kind of ridiculous. And the skewness, the craziness of the recovery is that it's not even. It's not like everybody's going to do well. The people that invest in stocks are going to do well. So you guys that are invested, give me a yes or no in the chat if you're an investor. If you're an investor and you own stock, give me a yes or no. Those of you who don't own stock, you can actually learn to buy your first share. This is a great day to learn how to buy your first share of stock. I have a free training for you guys. It's firstshareofstock.com. That's firstshareofstock.com. So everybody let the newbies know that it's not that hard to invest. You can get started. It's very easy. And this is probably a really good time to do it because the market has dipped. America's on sale. First thing I did this morning was I made my move. I actually wanted to get back in on Tesla a little deeper so I could write some call options on it because I like to feed the speculators. I don't like to speculate, but I'll feed the speculators all day long. And so the first thing I did this morning was I bought. I jumped right in. Now, does that mean it's the right move at the right time? I have no idea. Like, nobody knows. See, one of the biggest things we spent time learning in graduate school, and I wrote about this in my dissertation, is that really nobody really knows exactly what's going to happen. You have some idea. You kind of know what the variables are. You know what's sort of popping off at any given moment, but you can't really pinpoint the future. Nobody has a crystal ball. So nobody knows exactly how this economic recovery is going to play out. Right now, it's jagged. It's heavily in favor of stock market investors. If you're not a stock market investor, I kind of honestly feel sorry for you because you're in the bad side of the economy. You're in the bad side of town. You know how cities have Cities have good sides of town, the safe side, and then then you got the like west side of Chicago, where all the horrible things are happening. Well, you're kind of in the bad side of town. Now, once you get in the good side of town, and so I'll give you the URL one more time. Type it in, somebody, if you can, so other people can see it. It's firstshareofstock.com. Firstshareofstock.com. 4 words. Firstshareofstock.com. Okay, so I'm not going to say anymore. Now you guys have the URL. The training is free. Go there, get started. It's a great time to start investing. Do me a favor, if you could, please hit the thumbs up button right now. If you haven't hit the thumbs up button, please hit the thumbs up button. And thank you, Dual, for moderating the chat. I appreciate it. All right, so let's talk about more of this this craziness right now with the economy and the market. So you have a K-shaped recovery, which means a few interesting things. It's really rags to riches, and it's built on inequality. So you have the stock market investors are doing really well, which means rich people are getting richer. They got richer during this downturn. Jeff Bezos was billions of dollars richer. Elon Musk, billions of dollars richer. Many of you in this room have made money during this recovery. Raise your hand. Give me a yes or no in the chat if you've been making money and your friends are confused because you bought a new car during COVID, right? Just raise your hand. And so the other part of the skewness, the other part of the imbalance of the recovery is that all the companies didn't do well at the same time. The tech companies, the safe haven stocks, the stay-at-home stocks, all benefited dramatically from COVID. Zoom, it comes to mind first and foremost because Zoom, oh my God, Zoom probably makes 10 times more money than they made before COVID because now everybody's having Zoom meetings, right? So Zoom goes from 2 million subscribers or something to 20 million subscribers. My God, it's insane, right? So they were at right place, right time kind of thing. Then you had the FANG stocks, Facebook, Amazon, Netflix, Google, and I think Apple, Facebook, Amazon, Apple, Netflix, and Google, FANG, F-A-A-N-G. Yeah, there you go. And then you have Microsoft. So you just kind of have these safe haven companies where everybody dumped their money into these companies. They're kind of like what the Japanese yen, for various reasons I won't go into, is also like a safe haven currency. For some reason, the yen tends to go up when the global economy is going down and people are scared. They want to put their money someplace safe. So in Disney is another one. I'm not sure. I haven't looked at Disney. I own Disney, but I think Disney has done pretty well. And so you've had a skewed, imbalanced sort of recovery. These stocks were eventually going to fall. They were eventually going to fall. Tesla, especially. Tesla was a time bomb waiting to blow up. Like Tesla is almost like the poster child for crazy Robinhood speculation. So one of the things that I mentioned earlier, and I'm not going to say I knew this for certain, but again, because I'm seeing all these dynamics, I was wondering how this is going to play out. When I saw Tesla starting to dip, and the market as a whole, and the tech stocks starting to pull back, I said, I wonder what's going to happen when all the Robinhood investors start getting these margin calls. And when margin calls occur, that means a margin call basically means that you borrow money to buy your stock. Basically, you bought your stock on credit. Well, when your equity drops, the bank ain't stupid. They're going to come in and they're going to say, you need to put up more equity now. Like the losses belong to you. The gains belong to you, but the losses belong to you. We'll just be a partner. Just give us our money back plus interest. We're good. But the leverage is yours. So that means if the stock goes up, you can go get rich. But if the stock goes down, you're taking all of that hit. We're not taking any of that. So basically, they start scooping money out of your equity when the price starts to drop. So as a result of that, you're seeing these margin calls going down from all these Robinhood speculators that borrowed a ton of money to go buy, all the stock that they could. And that pushes the prices down further. And if you look today, you see where Tesla dropped another 15%. And they're attributing a lot of it to the fact that Tesla was not added to the S&P 500. They expected Tesla to be added to the S&P 500, which would have been a great move for the company, because what that does, inclusion in the S&P 500 increases the demand for your stock. You increase demand, then that's going to increase price, assuming the supply remains constant. So here's some of what's being stated about this. Do me a favor, if you could, please hit the thumbs up button. And also, please subscribe. Subscribe to the Black Financial Channel, theblackfinancialchannel.com. And also, in case you guys want to know, I actually do have a Spotify podcast. It's called the Dr. Boyce Breakdown. So you can go on Spotify and just look up the Dr. Boyce Breakdown. You can find my podcast over there. All right. So let me see here. So What they're stating here is that on CNBC is that high valuations in the mega cap stocks are stretched far beyond historical levels. That means that these big companies are basically the rent's too damn high. Basically, like the prices of these stocks have gone way up, and they don't match the valuations. What's also occurred is that the new cowboy investors, the Robinhood Wildcats, which is fine. I'm not judging. I'm not disrespecting or anything. It's just kind of funny to watch. They are pushing the valuation super high. They're buying stocks like they're Gucci belts, right? If you think about it, a person that buys a Gucci belt is not a rational consumer. They're not buying a Gucci belt for $600 because they truly believe that the fundamental economic value of a Gucci belt is $600. They just buy Gucci belts because they're cool. And the Gucci belt, instead of being $600, if it was $625, then they would pay $625 because they really just want a Gucci belt. Well, a lot of people feel that way about different stocks. There are stocks that attract speculators where they're like, I just think that this company's cool. I love Elon Musk. I just want to own Tesla stock. I don't care what I have to pay because I never took a finance class anyway, so I don't even know the valuation models. I don't pay attention to the analysts, so I don't even know what the value should be. I just know what I'm willing to pay. Oh, they did a stock split. That means it's cheaper. It's cheaper than it was before. It may have been incredibly overpriced before, but now that it's cheaper, I'm going to buy it because my reference price, the price I'm comparing it to, is the price that I saw before. So I saw it at 400 or 450. Now it's down to 380 or 400. I got to buy it because it's $50 off. When you didn't actually take the time to realize, well, maybe Tesla stock was only supposed to be worth $200, right? Maybe the true value is only $200. But that's the problem too that us experts have, is that I've seen every financial model known to man. I've done all the mathematics on every single level. That's what we have to do. That's what we have to do as professors. And I can tell you that these models give you very precise ways of giving you incredibly imprecise results. They're extremely precise about processing information that might be absolute garbage. Basically, you're taking estimates of the future. It's almost like when in the beginning, remember when COVID, when they had all these projections and all the projections were stupid and they were like 80 million people are going to die on Tuesday, right? And they're giving you all these out of control numbers because they're throwing information into these variables, into these equations. And these equations are built where if you throw in the wrong information, you're going to get bad results, right? And that's what happened. We got bad results. Well, the same thing is true. Actually, the financial models that value stocks, the models we use mathematically that tell you what a stock price should be, a lot of those variables are imprecise, and those equations actually come from biology. So the same equations that are used to measure how many people are going to catch corona in the next 6 months are very similar to the equations that are used in finance to determine what a stock price is worth. Literally, we stole our equations from biology, right? So long story short, nobody really knows like what exactly is going on, what the prices should be, what's going to happen. But right now, you are seeing some sort of mechanical breakdowns in the market that I don't think they're going to be long term. I personally think I look at Congress, for example, and the Fed. First of all, the Fed has shown that they are ride or die when it comes to trying to boost the market. That's what they do. That shouldn't be their number one mandate. I believe their number one mandate should be full employment, making sure everybody's good across the country. But for whatever reason, they get all jittery when the stock market declines. I believe it's because that most of our politicians are a bunch of selfish SOBs. That's what I believe, that our politicians, they care more about their 401ks than they care about whether or not you have a job. So I believe that this decline in the market is going to get their attention. So what's going to happen is Nancy Pelosi is going to call up, Donald Trump or whoever, and she's negotiating with Steve Mnuchin and saying, okay, let's make a deal. Let's get this stimulus package passed because this market's declining. And I woke up this morning and I almost went crazy. I almost had a heart attack when I saw my 401k. And they're going to go and they're going to sit down and they're going to hammer out a stimulus package where everybody's going to get a check maybe, or they're going to do some unemployment modifications. They're going to do some other things. And what's going to happen is you're going to see an instant pop in the stock market as a result of that. It's completely artificial, completely biased, but that's what I believe is going to happen. Also, the Fed is noticing this, right? So the Fed's going to come in. They're going to do whatever they do, right? The liquidity moves that they make. I also think that that you're just this is just a correction. That's what it is, right? These stocks were priced too high. Everybody knew this was going to happen. And it's and Jim Cramer, for example, on CNBC was already talking about locking in your profits anyway. And one of the points that he's making that I agree with is that even with the losses that you incurred today, if you started investing, say 6 months ago or right during COVID, you probably are still ahead. You're probably still ahead. So if your goal is to lock it in and sell your stock and walk away with your money, do that. But that's not what I'm doing. I just want you to, just so in case you're wondering what Boyce is doing, which is weird. I'm talking about myself in the third person. Alicia says that that's a sign that you're a conceited bastard. So I apologize. Let me back up that. That just sounds like an arrogant butthole thing to say. If you want to know what I'm going to do, I'm actually not selling. I'm a long-term investor. When you're a long-term investor, then you have perspective where situations like this are blips in the radar screen. They're just temporary. They're drops. Is it going to be prolonged? It could be. But if you look at this over a 10-year horizon, it probably won't even show up in the graph. So let me just give you a couple more pieces of information here. Do me a favor, hit the thumbs up button, share, subscribe button. And also, if you're interested, like I tell my students, like what stocks I'm buying. I talk to them about, I answer a ton of questions for them, stuff like that. So if you're interested in joining our stock market investing program, it's really good. And the first month is just $1. So feel free to go to theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com. Somebody type theblackstockmarketprogram.com in the chat for anybody that wants to go take a look. The first month is just $1. And there's a money back guarantee if you're not happy, but everybody's happy. So you'll love it. So let's see. Tesla plunged 18.4%. After the S&P Dow Jones indices failed to add the surging and speculative stock to the S&P 500 after the bell, investors were betting on inclusion into the S&P 500, hoping for the stamp of approval to rally the stamp of approval on the rally by the S&P. The snub shows the risks to the overheating Nasdaq trade. So they're saying that they left. It's not theblackstockmarket.com. It's the Black Stock Market Program. Don't forget that word program. So basically they're saying that Tesla was not included in the S&P 500 because there was risk that their rally pushed their price too high. So apparently they're arguing that somebody made the decision that Tesla was overpriced and that's an issue. Also, they said other hot Nasdaq stocks were hit hard. Facebook, Amazon, Netflix, Google, parent Alphabet were all down more than 2.8%. Apple dropped by 5.2%. Zoom fell by 5.2%. Shares of SoftBank is this massive fund run by a guy named Masayoshi Son, where they've got I can't remember how much money they have. Is it 200 billion or a trillion? Half a trillion. It's an insane amount of money they have where they literally just run around throwing money at everything. That fund dropped 7% as it was identified as the big options buyer, making a bet in the billions on tech stocks continuing to surge. So they're claiming that Masayoshi Son and SoftBank was buying a lot of these call options, which obviously many of them are going to expire worthless now. That's the risk of buying options. If you're tempted to get into the fast money of options trading, just know that buying stock options can cause you to lose all your investment very quickly. So it feels good when it wins. It's great when you're winning, you feel like you can't lose. But when you're losing, you feel like you can't win. So just be really careful about options trading. If you're not sure about options and stuff like that and you want to learn more about them, I think options can be a valuable tool for risk mitigation, not so much risk chasing, which is what some people use it for. Feel free to go check out our options program. It's blackoptionsinvesting.com. That's blackoptionsinvesting.com. And like a lot of programs in the Black Business School, the first month is $1. So you can try it out for $1. That's blackoptionsinvesting.com. Let's see. Semiconductor stocks were under pressure amid simmering U.S.-China trade tensions. Okay, so NVIDIA slid 6.4%. Micron lost 3.9%. Applied Materials. So everybody lost sheesh. Woo! On Friday, stocks snapped a 5-week winning streak after a big reversal of major tech stocks. So this is a continuation of what you had on Friday. Many on Wall Street believe the weakness derived from worries that the massive tech run-up pushed valuations to unsustainable levels. Even with last week's pullback, the Nasdaq is up more than 70% from its March bottom. Given how extreme many of the indicators we follow have become by early this week, we believe it will take more than just a mild decline to work off those conditions. Matt Maley, chief market strategist at Miller Tabak, said in a note on Sunday. Therefore, we still believe a correction of more than 10% is probable, not possible, probable. So basically, they're saying, put on your seatbelt, sit back, get ready, because this ride might not be over. you want to know what I'm doing? I'm actually pulling together my cash so I can invest more. Because that's my strategy. I'm ride or die with it. That's what I do. I'm an investor. I don't run. I don't get scared when the market drops. It literally means almost nothing to me. It means nothing to me. Now, let me tell you, I'm gonna give you a little secret. You remember Phil Jackson, the coach of the Chicago Bulls, who was kind of like a hippie type of dude. You know, he was into like Zen meditation. They call him the Zen master. Well, I've become the financial Zen master. And let me explain my way of gaining financial peace. Because if you don't, this shit, excuse my friend, I'm sorry, I'm cussing. This will drive you crazy. This will drive you crazy. If you're not careful, it will drive you crazy. Because every day you wake up and you're looking at this thing and you're feeling richer or poorer based on what those numbers are. I'm here to tell you that some of that is an illusion. Not all of that, but some of that is a solution, or is an illusion. And so let me tell you about my financial Zen. Because financial psychology, in case you didn't know, part of my dissertation was on financial psychology, how investors think, right? So one of the things that I do to maintain my inner peace when it comes to financial Zen is I always maintain a long-term perspective, right? Which means that when I see it go up or down, I don't get carried away with it one way or the other. I say this too shall pass. I don't run to Alicia and say, oh my God, we're richer now because our stocks went up in value. I think of buying my stocks the same way I think about like buying my house. We bought this house, and the house, it's not super fancy, but it's not cheap, right? It's a nice house. I built my man cave in the basement. We got plenty of bedrooms, plenty of space to have guests that come by. Plenty of places to pee and stuff, right? So you're not bumping into people in the bathroom. So I like the house, right? Now here's the deal, right? So we bought this house as a long-term investment. We're going to sell this house in a few years when we decide to move. So imagine if every day somebody came to your house, knock, and said, yesterday your house was worth $252,444, but today your house is worth $247,912. And we just want to make sure you know that you are now $5,000 poorer than you were the day before, right? If you think about that, right, does that number really matter if you're not going to sell your house? Does it really matter like right now? Right now, if you were selling your house right now, then that will become what is called a realized loss, right? You would be realizing that loss. You'd be like, dang, man, we could have got 5,000 extra if we sold it. But you're not selling. It's the same house, right? Same number of bedrooms, same number of bathrooms, same square footage, exact same house. It's just that the market, has had a shift for whatever reason, right? So the key idea here, the point I'm getting at is this. When I buy my shares of stock, if I buy 100 shares of a company, 100 shares of Tesla, or 100 or 50 shares of IBM, I own 50 shares of IBM. I own 50 shares, 50 pieces of paper that give me a right to a percentage of IBM's cash flows for as long as I'm an owner in that company. That is what I own. I own a business, right? So really, whether the market price changes or not only has a limited impact on the true value of my investment, right? Like that's what I own. I own 100 shares. If the price drops by 2%, I still own 100 shares. The price goes up by 3%, I still own 100 shares. It's like owning 3 acres of land. You got 3 acres of land, whether the value is $100,000 or if it switches to $95,000 or if it goes up to 105, it's still 3 acres of land. So what I want you to just kind of do is consider this. I'm not telling you how to process this, but this is how I process it. This is why price declines don't bother me that much. I'm telling you the truth. They don't. Because, as a long-term investor, it's like, okay, we got our stock over here. We own our stock. I look at the numbers for entertainment just to know what's going on. Entertainment and education. Like, ooh, man, that was a big drop. What's going on here, right? That's kind of what it is, right? But at the end of the day, you just own the asset. And that's what rich people do. They just own their stuff and they just hold on to it. Think about it like this. If you're a billionaire, do you understand that being a billionaire, like you can literally go crazy because every single day your wealth is moving by millions of dollars a day. It's going up by 2-3 million. Next day is down by 4 or 5 million. Jeff Bezos his wealth has increased by 10 billion in a month. It has dropped by 20 billion in 1 month. Right. So you got to find a way to kind of shake that off and focus on what matters. The long-term effect of just being an owner. right? So that's how I think about my stock. So yes, I'm going to be buying more stock. I already bought some more. I've already did my buying for the day. I'm not doing anything else. If you want to know more, if you want to dig in deeper, I'm actually going to do some special sessions with my students and answer a bunch of questions. So feel free to go check out the Black Stock Market Program. It's theblackstockmarketprogram.com, THE. That's theblackstockmarketprogram.com. You're going to love it. You will grow as a result of it. We're really good at what we do. So in fact, I think we're the best in the world at what we do. So feel free to go check it out, theblackstockmarketprogram.com. And if you haven't bought your first share of stock yet, or if you want to just get free information from the Black Business School, go to firstshareofstock.com. That's firstshareofstock.com. So please hit the thumbs up button before you go. I appreciate it. I'm about to go to the grocery store. I got to go get me something to eat. All right, guys, have a good day. I'll see you soon. And hang in there. Don't panic. Everything's going to be all right. Talk to you later. Bye-bye.